So just to start, I think would be nice a quick overview, brief overview about your business. So starting with you, Benjamin.
So I'm Benjamin Gleason. I co-founded Guia Bolso with my partner Thiago 7 years ago. And basically, kind of the initial thesis was looking at the market and seeing it's an extremely large market, extremely lucrative when you talk about financial services. But consumers were typically very poorly served. So as we looked at the market, we saw that people had a lot of trouble understanding about their own finances, credit products, investment products, and a lot of difficulty actually accessing good products based on their financial behavior, their financial profile. And as we looked at the kind of the problem, we saw that there was a big issue around lack of data in the market. So no positive credit score, no types of easy ways to kind of get a consolidated view of a person's financial profile. So the first thing that we did was actually create the technology to allow users to connect their bank account. We pull in all the information, so we see all of the transactions on their credit card statement, their checking account, their investments, et cetera. Organize that in a single place in a consolidated view and help them as a first step, kind of a first pillar of our mission is to help people get a better sense of their financial management. And from doing that, from getting access to the data of millions of users, we could actually develop a really deep insight into what are the types of products that they're using today and what products in the market are available that we could offer them. So we created a second pillar around curation of financial products using all of this data that we have. So credit scoring, very detailed segmentation, exactly saying, this is the product you have today. This is the product that we can offer you from our partner with, for example, a much lower interest rate in the case of personal loans. And so, we've kind of built this up over time, and now we're basically positioned as a digital financial hub where our users come in. Typically, they're customers of the large banks. We get access to all of their data, and then we use their data to help them get access to better products in the market in an asset-light partnership model with a whole number of different banks and Fintechs there in the market. So basically being this very kind of close, trusted advisor for them and an acquisition channel for our different Fintech partners.
So
Marcelo, first of all, thanks for the invitation, for being here. It's a pleasure. Rebel is a technology company that basically does one thing. We harness the power of technology and data in order to be able to offer Brazilians, for the first time in pretty much everyone's lifetime, the opportunity to really have access to credit. Our view is that Brazilians never have had access to credit directly. Brazil historically, you borrow typically against collateral. So if you have an asset, a bank will lend to you against that asset, liquid or illiquid, depends on multiple different types of bills. But no one truly ever did credit properly in Brazil in our view. So banks never had to lend money to consumers. This experience is terrible, and on top of being terrible and very poor customer experience, is the most expensive credit market in the whole world. So it's a unique opportunity that we are tapping on that.
So Geru is a personal unsecured loans platform operating out of Brazil since 2015. We focus on prime and near prime clients. We offer them a really good borrowing experience, lower rates, higher ticket amounts, contract flexibility. And we fund these loans through the debt capital markets, and we have been doing so since 2015. We've raised over R$1 billion in securitizations so far. We have issued about R$900 million of loans in our story. And we built an end-to-end platform to handle clients from origination all the way through late-stage collections. And being involved in the entire credit cycle, including the servicing part, which is very complex in Brazil, has been proving to be a very important differential for us.
Great. Thank you, Marcelo, for the invitation. I'm glad to be here. Recarga Pay, I'm the founder and CEO of Recarga Pay. Our basic mission is to democratize mobile payments in Brazil. I've seen panels before this one talking about how hard payments is, how important convenience is in Brazil. If you live there, if you do transactions, you see that payments is complex. What we're trying to solve is allowing people to pay for essential payments, paying their mobile top-ups, which still 70% of the population has, being able to pay for bill payment that 100% of households pay for, public transportation. And all these types of payments are actually, when we started the business, there was absolutely nowhere you could pay for these things on a mobile app. And what we've been able to basically to solve here is being able to allow people to pay with credit cards, local credit cards, debit cards, depósito bancario, cash and lotéricas, and things of the sort. And it has allowed us to scale dramatically. And as we made this engagement and usage of the platform, we're monetizing basically through financial services. So that we're doing microloans, people can pay in installments, we have a Prime subscription, and the model has gone up to 2.5 million active customers. We're doing almost $1 billion in gross transactional volume, and that's in a nutshell.
Well, a few questions already arriving, but what's your view about open banking and about timing that you believe it will happen in Brazil, the comparison between what's going on in Brazil and what we see in Europe or even here in US? Benjamin?
Yeah, this is a really interesting discussion. I think it's been kind of surprising how quickly it's really generated traction. A few years ago, probably almost nobody in Brazil knew had ever heard the word open banking. Now all of a sudden, at least, if you look at kind of the financial space and even the journalists that cover it, it's become quite common. In a sense, Guia Bolsa has been operating in an open banking type model for a long time. I think one of the key pieces behind what's coming with open banking, one of the things that we really support is that the data belongs to the consumer. The consumer should have the ability to use that data in their favor, to potentially move that data somewhere else, and to not have barriers be placed around trying to use the data in their favor to get access to better products. And so we've been doing that for many years already, and using the user authorization to access the data and then use the data in their favor with other partnerships. So I think it's a very positive thing for Brazil. I think the central bank has done a nice job of really looking at other markets and trying to understand what the experiences have been, what's worked in certain markets and not worked in others, and trying to adapt that to the Brazilian markets. I think that is very positive. I will say that from my own perspective, I think the hype around it is still a little bit over, in the sense that it's going to take probably at least several years for anything significant to happen in terms of both the regulation, the market responding, and I think there's still a big challenge even once you are able to open the market to all the data. It's how do you access all of these different sources of data, then how do you understand all the data, and then how do you turn that into models or things that you can actually use to then create better financial products around it. So it's something we've been doing for 5 years now, and we're still refining those models. So I do think perhaps the timing will be a little bit longer than some people in the market are thinking, but overall it's extremely positive, and we're supporting it.
Okay.
I have a very bullish view on what's going on with open banking for two major reasons, like in being very, very direct. One is that our society overall, worldwide, we live in a data generation, right? So there are a number of studies that argue that data is more valuable than oil right now, right? So depending on if it's more valuable than oil or not, there's a tremendous amount of data and a tremendous amount of value being generated from that data. So regulators and governments worldwide are trying to regulate what's going on with data. So we see the evolution of PSD2 in Europe, like GDPR, and in Brazil, the most recent publication of LGPD, which is the Brazilian version of the data protection and regulation legislation that was approved last year, and that is going to be enforced as early as of 2020. So in a marketplace where we see our government already kind of dictating terms and regulating how data is going to flow, empowering consumers as owners of the data, that's going to impact the banking system. no matter like how we call it, if we call it open banking or not, there's going to be more flow of data. There's going to be more monetization of data happening in different ways across the financial system. In my view, like open banking is the most secure, scalable, and reliable way of enforcing something that's already like a federal regulation. So there's no going back. So either we adopt open banking or we don't, but the end result is going to be the same. On top of that, what happens is Brazil's economy is like recovery is going to be is being very slow. There's a lot of like value trapped within Brazil's financial system. So if we take a look of what happened over the years, all gains of productivity that were generated by technology in the financial system, everything was trapped, all the value created was trapped within the financial system. So when you look at that, there's a potential to kind of like unlock a lot of that value back to society. So what the government is trying to do is create mechanisms for incentivizing competition. And that's like in a nutshell what open banking is going to be bringing to the economy, this conjunction of competition and leveraging data. And I think that's going to happen faster than anyone's actually expecting.
Just to complement, not only new data is going to be available with open banking, the ability to initiate transactions is a very powerful thing and will create a whole new generation of financial products. For instance, at Geru, about 50% of our clients are refinancing more expensive debt. Today, we have to lend them the money to them in the hopes that they will go to the bank and pay that debt. With open banking, we will be able to take out the balances and initiate the transaction, pay back the debt, and consolidate for real. So that's just one example of many financial products that will come up with the ability to initiate transactions, which is the other half of open banking and probably the one that's going to take the longest to be implemented.
I mean, to add anything else to this, I would say that the macro trend is just positive, right? In the sense that the central bank is willing to deregulate in the will of destroying or at least flexibilizing this oligopoly that the banks have. That's very positive, I think, for any of this people in this panel. It'll be very useful for us in that way. So there's going to be more competition. I think it is, if you do business in Brazil, you know, everything takes a little bit longer. And at the end, it's really about the details. I mean, the details of this, once it comes out, then you're going to be able to make decisions and really see if it makes sense or not. But internationally, cases such as UPI stack in India and things of the sort have really revolutionized these financial industries. And I'm personally very interested in evolving through KYC, you know, trying to get one identity that I think that would actually change the dynamic of the market dramatically, more than just being able to be connected to banks and share data.
Okay. Well, considering what's next is the name of the panel, what will be your next steps in terms of strategy? Let's start with Rodrigo this time.
Oh, it's top secret. No. Look, it's very basic what we're trying to build. We're trying to go to these typical payments, essential payments, and allow people to pay with very ease these typical payments that you normally do, and then layer on top financial services, and on top of that, just allow people to pay for anything through a mobile wallet. Everybody and their mother wants to build a mobile wallet today. Retailers, supermarkets, banks, you name it. Everybody wants to be in the game in a sense. It's just very complex to do payments in Brazil in a sense. And it's a model that you need a lot of scale, but at the same time, the stack for managing fraud, which is dramatic. So we have started to lend. I think lending is a feature more than an end game. And so I think if you have the transactional volume, you have the data from the consumers, you start getting more frequency, which we will continue on adding in the sort. It will just give us the capability of just allowing customers to get better lending rates and things of the sort, and just continue. It's a scale game at the same time. And so there isn't much of a secret of what we're doing.
Sandro?
I think that lending is our core, is what we do. And we see the interoperability of all different platforms becoming the new norm. So I think Eric mentioned before in the previous panel that there will be a rebundling of finance. That's probably correct, but I don't think it's going to be under proprietary names, proprietary brands, and proprietary lending strategies. So for us, we have worked always at Geru in building the ability to do what we wanted to do before starting doing it. And we are currently prepared to be lending in practically almost any platform without guarantee. So that's part of what's next for us, is to open up partnerships and other origination pools.
So if I open my wallet, you could lend in mine.
That's correct.
Well, maybe we have a partnership here as well.
And we can charge a fee for the introduction.
Oh yeah, wow. So quickly, you're quick, huh?
Okay, so Rafael,
See who the banker in the panel is.
let's see if I can charge another fee with you.
So in a nutshell, I think like we started seeing, as Eric and Sandra both mentioned, fintech has been about unbundling for like a period of time, right? And now a lot of like players, as the industry matures, like we start seeing people are adding more like products and rebundling back the broader banking, let's call it. However, if you take a look at the broader market and what consumers really perceive in terms of value, my view is that we're still too far away from that. So there's still more than 30 million people unbanked in Brazil. Credit is still expensive. Payments are still expensive to a sense, despite all the competition that is being created. So there's still a lot of legwork to be done in terms of like really kind of like disrupting not only the technology and the experience, but the cost of like processing transactions in Brazil, which is insanely high. So I think we're still going to be seeing a lot of like niche players focusing on kind of like attacking those profit pools and being very efficient and driven to kind of like get market share and really be consistent in delivering value in those profit pools to those consumers. And in parallel, you're going to be seeing a lot of people also like kind of like rebundling products like the digital banks are trying to replicate in Brazil.
Benjamin.
So, just feeding on the theme of the unbundling, I think that, kind of when we look back, when we started, it was basically, 7 major banks that became 5 major banks. It was fairly simple for the consumer because all of their products generally came from a single source from the bank, typically their manager recommending the product and the user consuming the product. And so it was fairly simple, although tended to not be very good products. They were quite profitable for the bank. Fast forward, there's been this huge unbundling. There's an incredible amount of complexity now in the market for a consumer to understand what's the best investment option for me, what's the best credit card, what's the best loan, has become much more challenging. And I think at the same time, all of the money kind of pouring in and all of these plays around, digital banks and things like that has created a phenomenon where the acquisition cost is going up. So in order to find good customers that are needing the product that you're offering, increasingly we're seeing an inflation of those costs. And at the same time, as the competition is coming to the market, the margins are getting squeezed, and so it's increasingly hard to create high lifetime value products, in a market where everything is suddenly becoming free. So Guia Bolsa basically sits in the middle of that. We have these millions of customers that we completely understand. They trust us when we recommend products to them. And for our partners, we're able to say, hey, we already know exactly what the financial profile of this customer is. We already know that he has, X 100,000 reais to invest and et cetera. so we can be kind of that matchmaker in the market and really, create a higher lifetime value customer opportunity for our partners, while also helping our users to get access to better financial products. And we're seeing that is extremely powerful, even to the point of, now in this kind of product curation piece that we're building out, we're able to negotiate with the partners to offer better products than even they're offering in the general market. So, for example, if you open an investment account and invest, with our partner, they'll give you 25 reais back, already with the first 100 reais that you're investing. So there's an immediate gain to our customers that we can offer that they're not necessarily going to get in the general market because of our negotiation power and our scale. And I think that's powerful, and that's what we're really doubling down on, and that's where ultimately the significant increase in lifetime value of our users is going to come from.
Okay, there's an interesting question from the audience. How do you believe is the view of the big retail players about your businesses? Do you believe they see it as a threat or as an opportunity to maybe to team up, or what will be? Let's start with Sandro.
Okay. I think Brazilian banks are extremely resilient and extremely smart in general. The fact that there is a underserved consumer is not a testimony to the bank's lack of ability to do that. Is actually on their self-interest to do so. I think banks are getting very smart about investing with fintechs. We have a partnership with a bank that is tied to Bradesco and to Banco do Brasil, and it's working very well for them and for us in part of our originations. Also in the securitizations, the banks are distributing or placing the securities. Banks are the asset managers within the banks are allocating. So I think to generally say banks don't like us or banks see us as a threat, or I think it's much more nuanced than that. I think there, as Rafael was mentioning, there are a lot of pockets of underserved clients and value that can be unlocked. And banks realize that they may not be the right people to do so, and they're partnering with fintechs to do that.
Okay. Anyone else would like to add?
Yeah, just building up on what Sandro just mentioned, I think there are like two things happening. One, in the broader context of the industry, my view is that like the financial industry in Brazil is going to undergo a very severe sort of like margin compression trend for like a really long period of time. So like the very like large like margins that banks are used to through fees or like high spreads, I think that's going to be over like very, very shortly. Competition and like regulatory pressure and a lot of other things are going to be coming into play, and banks are going to start like suffering some of that. Directly like related to us, I believe that we are like more potentially like partners to banks than competitors. Again, like I think like was discussed in a lot of different panels over here, like all markets in Brazil, whenever you compare it to the GDP size, there's like a very big under-penetration, or sort of a very low penetration, and for financial services also true. So if you take a look at credit and compare like the household debt of Brazil to GDP compared to any other country, like we're totally like under-leveraged because credit has been done so poorly like over the last like couple of decades. There's like a lot of space for like just like expanding the space, and it's going to be like a redistribution of like market share. So if we're going to be partnering with banks, grabbing some of that market share alone, how that whole industry is going to reconfigure is going to be interesting to watch. But to just add some spice to that, if I were a Brazilian bank right now, I would be much more concerned about the big techs than about sort of like the kind of like entrepreneurials and the startups in the landscape right now.
So no fee for you. That's what he's saying.
Would you like to add?
There's no such thing as a free lunch, they say. The meat was great today that I had. No, I think your question was regarding retailers, right?
Retail players, but all the traditional banks.
Because clearly, I mean, retailers want to use the leverage that they have of their traffic that they have offline, online, and things of the sort. And the question was regarding if we could lend into that and we could partner. I think most of these companies will try to do it on their own or partner with solutions are pretty much very nascent. I don't know how interested they are in more established. I think once they start testing these things out, then they'll realize it's much harder than they'll experience. So there are going to be possibilities there for sure of partnerships in the sort that I think, like you were just saying, that you're not just going to be a one destination for lending. You're going to be offering your services to different sorts. So I think that is something that there is going to be combinations of it.
I was just going to say, I think it's hard to be everything for everyone, and I think increasingly companies are going to realize that. So the whole kind of super app play and things like that, it's easier said than done, and it hasn't happened in very many markets. So I think that at least when we looked at the market, and even some of our experiences, what we've gone through already is basically looking and saying, what do we do really well? What are we quite differentiated at? And what potentially our bank partners, for example, what do they have that we don't have? And that's really our now our lending model, which is completely asset light, and we think very efficient, is basically we just said, okay, we have all the data, we have the user experience and the technology, so why don't we control the entire underwriting process? But our bank partners have a much cheaper cost of capital and more efficient servicing and collections. So we leave that with them, and we do kind of the technical DNA piece. And I think that works really well, and I think that type of partnership is basically leaving more potential profit on the table. So even if margins do start to come down, if you're able to find those synergies, you still have a really interesting business, and you can be very competitive because you're taking the best of both worlds. And so I think increasingly, we're looking for that, and also many players in the financial services industry are as well.
Okay, and how do you see? What's your view on the way the credit risk is being priced in Brazil and maybe comparison with other countries?
So I'll take that first, but if you take a look at like worldwide, kind of like cost of capital is one of the major components on what sort of like how you create like a rate for like the final consumer, right, for the end consumer. Take a look at Brazil. Like there's a correlation between like our risk-free interest rate and the rate that goes to the consumer, but at the end of the day, like the spread is so big that it doesn't really matter. Right, so there are a lot of like different components, like operational costs, kind of like default risk, that comes into play as a much bigger percentage of the rate that's passed the consumer than anywhere else in the world. So what happens at the end of the day is that it became very expensive to transact in Brazil. So there is like a lot of like regulatory discussions around like how we can make those transactions like cheaper and make the market more efficient, and also like how we can properly like manage risk in order to be more assertive on like who to lend and who not to lend, right? So there's an argument of the credit card industry that the credit card rates in Brazil are insanely high because out of like every 3 credit cards in the market, 1 is past due, right? So what this means is, at least from my perspective, is that out of 3 people, 1 shouldn't have a credit card. Right, so like, why give a credit card with like a wrong limit to someone who's going to default on that, right? And make the 2 other people who are in the system pay for this one who's not paying. So Brazil lacks the proper like mechanisms for underwriters to understand like how and how much to lend and like how to lend to someone specifically. And that's where companies like Gabolso, ourselves, Geru come into play, and we can harness a lot more data and behavior of our consumers to be much more assertive on like how to properly do that. So out of those 3 components, interest rates are like on an extremely low, like historically low levels. We don't expect there's no expectations of that bouncing back up. So we expect like low cost of capital. We expect the use of data to make this kind of like forecast and prediction of defaults much more efficient. And we see a lot of like regulatory pressure to lower the cost of processing all of that.
Okay. Sandro?
I think there is something very disturbing about the way credit is priced in Brazil. So in unsecured lending in particular, there are 350 billion reais of loans outstanding at the end of the year. And that represents half the volume that was issued during the year. So the type of debt that the Brazilian individual is taking on personal unsecured is very bad. Is 260% APRs with 26% default rates. And the reason behind that, in my view, is a data problem. We do not have good quality data that is available for both incumbents and challengers. So if I work at a large bank and I want to lend to the other bank's client, I don't have a lot of data to build on. And that's the case for all of us here. We have to build on data that is limited. And the other problem is that we don't have a national credit score. And so people don't live by the rule of taking care of their credit scores. People are not really aware of what their credit scores look like. And delinquency is very high. It's a behavior problem. It's a moral hazard problem. And although there are very positive trends in the future, still the behavior of the population and the level of financial education will need to change a lot. So now we have companies that are able to somewhat do risk-based pricing, although with imprecise tools, which we are all doing better than the mass, but it's still imprecise, and rates are still high. So we charge typically 25 to 80% APRs. Those rates are extremely high, but we are charging 50% less than what the client is paying at their bank. So there's a lot of room there to work and improve, but still data will be probably the biggest source of development in that.
Okay. Benjamin, considering your experience with Just, would you like to add?
Yeah, I mean, I agree with what they said, and I do think that there's a bit of a structural problem, and so there is a reason that the rates are higher probably than what might be justified. But there's also, I think, an issue, at least when we look at this, is how do you drive positive selection? So how do you find customers that potentially have a better profile, that are potentially going to perform better because of this behavioral issue and potentially some of the kind of irresponsibility or not understanding. So we had an experience where we are originating both loans directly via kind of a lending website as well as via the Guia Bolsa app, where the users are coming in to manage their finances. And it was really interesting because we could compare head to head there. And so in one channel you have a lot more demand, but on average more adverse selection because it's people who are kind of in the market actively looking for credit. On the flip side, in the Guia Bolsa app, we have a much higher income customer on average, somebody who's financially active. He has products from his bank. You have a lot more data points about him, and he's not actively necessarily looking for credit, and you can give him a credit offer. And that drives much better performance. And so there's something that you can adjust for that via pricing, but in a channel which is a direct channel where you're potentially not getting the same positive selection, you need to charge on average higher prices, which contributes to the overall high interest rates in Brazil. So I think one of the things that we look to a lot is how do we create a differentiated channel so that we're already bringing customers that on average are better, and therefore we can charge lower rates too. And I think that's something that which increasingly lenders are going to need to worry about and find what are the right channels.
Rodrigo, would you like to comment on?
Yeah, data and segmentation. And in a sense, that's why we've gone into this route of allowing people to pay their bills, their top-ups, their transportation, being able to get a prepaid MasterCard and get more data. It's basically a way to really detect and to see who not to lend, in a sense, and start being to segment much better with the actual payment data. And that's what we're proposing in a sense. And at the end, bottom line, what's going to happen is there is going to be compression because there is just more people, more companies being able to source better data now, and at the same time segment much better. So like you were saying, there's 3 people with credit cards, one is not paying off it in time. clearly, if you can start segmenting that, it makes a dramatic impact in your return on investment and who you lend.
Okay. Well, many fintechs and even startups in general are talking about super apps. What do you believe will be the future in this sense, and how you see that? Everybody's trying to be the new WeChat. So, Benjamin.
Yeah, I mean, I think it's obviously really tempting to have that vision. It's certainly worked well in China, but again, we just don't really see that in many other markets, and I don't know necessarily that Brazil is going to have a case like that. I think, around certain specific verticals, you can increasingly start to offer different services that make sense for that vertical, and whether it's different products as well as payments and other things, that may well start to happen, but I doubt, or I'm somewhat more skeptical on kind of this broad-based, app that everyone in the market is going to be using for all of their services. And so, ultimately, I think if kind of the way that we think about it is if we can kind of be at the center of people's financial decision-making and kind of consolidate their financial profile, we'd like to at least have them consult us before they go and make a financial decision or acquire a financial product. So it's like, before you go out in São Paulo traffic, you check Waze, right? So every time someone thinks about, finances, they at least check your bolso to see what their options are and to understand better. Even if we don't necessarily have, 100% of every possible service or product that they might want to acquire.
Guys.
I think the race for the super apps is interesting to watch, and I strongly believe that all apps are going to become marketplaces of some sort, because it's very hard to have a very large user base just by offering your own proprietary products. I think it's very positive for the ecosystem if some of these apps become relevant for a certain type of use and a certain type of decision. But I agree with Ben that it's not going to be a one app for all users type of market in Brazil.
Okay.
Yeah, I think that both extremes are the U.S. and China, and in the sense that it's amazing how it has taken off in China with mobile payments and the sort, in the U.S. it hasn't. And once you start thinking about that, you start saying, okay, there's way more competition in the U.S. for anything. Most entrepreneurs really dedicate to one specific niche or one specific side, and it's very hard for you to compete and build something that is widespread.
And many people say that this is the main, how can I say, differentiation from the startups. They focus on only one product.
Yeah, because it's almost that they can't, because there's so much capital and so much entrepreneurs and things of the sort that unless if you don't focus, it's actually very hard. But when you have countries that are less developed, I mean, let's say the case of Indonesia, you have Gojek, and they basically started in a way where that app is a super app, because basically through the leverage of the engagement of the users they had, they were able to launch a whole array of different verticals on top of that. And what happens is that investors start seeing that, they say, oh, it is possible to be made. I think the case in Brazil is the case that maybe a hybrid will appear, something that is not that you do everything like you might do in a WeChat, but there are going to be some strong players in food, in transportation, in essential payments, and things of the sort. It's going to be very hard, in my opinion, to have something that sticks to everybody, just because you have very strongholds today. If maybe 5-6 years ago, something would have appeared and would have really executed dramatically into all of these fields, maybe it didn't happen. So now I see it extremely complex to build something as a super app. That's my opinion.
Okay. Rafael, would you like to?
I think I agree with what Rodrigo just stated. I think it's going to be more of a hybrid, which is at the end of the day a matter of how super the super app will be, right?
Super duper.
Super duper. So at the end of the day, Brazil has things that we are closer to the US and European models, and on the other hand, we have cases where we're actually closer to China. So we make the case of the super apps in China, and there are no privacy concerns. There are no sort of regulations around it, And it creates a whole different set of like challenge that need to be observed from a society standpoint. However, like Brazil, like it's so difficult to execute stuff that once you build something, there's always the opportunity to build something that's right next to it. Right? And to Rodrigo's point, like in the US, when you look around, like over your shoulder, there's already someone who's building that thing that's like the next thing that it would do. So that sort of like prevents you from creating this sort of like super mechanism. So Brazil will be something in between both worlds, exactly to which extent we're going to have like this very big super app that's going to dominate everything. I think it's very unlikely. But we're going to have, I would say that definitely we're going to have maybe like a super app for like financial products or a super app for specific different groups of things that you can do.
Okay. Sandro, would you like to add something?
No.
Okay. So based on what's happening or what's going on with WeWork, what's your view on next rounds, or is there any impact for fintechs or even startups?
Yeah, I mean, I think just in general, obviously everyone looks at the market all the way downstream, and they're following the IPOs and where the performances are. But I think it's a mix. So you see a lot of companies that are waiting longer to go to IPO that are really, really good companies. If they did IPO, they would look great. They would probably perform great. So I think isolating just a few examples is probably a mistake. But I think overall, as all this money is rushing into the market, and especially coming into the market in Brazil, at some point investors do start to say, okay, we've gone through the growth phase. Now we want to see unit economics. We want to see more fundamentals that the business can be sustainable. I think in Brazil it's still very much on the growth side now, which is ironic because it was. For many years, investors were almost all looking only at the sustainability and unit economic side, and they weren't willing to pay for growth in Brazil. And now that's kind of flipped. But I think at some point it's going to come back to the center, and the companies that are building things which can drive positive unit economics, can drive stickiness and lifetime value of their customers, versus just basically subsidizing your customers to acquire them. Will be the winners, and so I think those companies will have the valuations that reflect the superior economic models.
Rafael?
Well, I think there are like two different things, and that question is a little bit tricky, right? Because there's one thing that's value, right, and the value that's created for consumers and that's captured by the company, and the other thing is like the price that's being paid for that value that's being captured, right? So that's where the mismatch is. So if you think about like Uber, like nobody can argue that Uber didn't create value like around the world, right? You can just like basically pick up your phone and get from point A to point B anywhere in the world right now, or like in like hundreds and hundreds of different cities. So there's tremendous value that's been created by Uber. You take a look at the IPO and the stock price and how it's performing. The private markets, the public markets are saying that okay, maybe like the valuation of the private markets was wrong, and the company should be valued at this level or whatever. But it's a multi-billion-dollar company at the end of the day. So like it created like a gigantic value. I think it's going to be the same case with fintech. So there's a lot of value being created. There's like, if you take a look, there's a lot of like profit in the industry. There's a lot of redistribution of profit that's going to happen. The question is like exactly like how that's going to be priced and the perception of price by both the private and public markets. So that dynamics is very complex and very difficult to balance.
Just trying to go from a different angle. I think there's a lot of stories about companies that went public in fintech at the wrong time, or before they had the proper economics or the proper business model or the proper compliance to do so. And that has, in the US market, for instance, that has happened in many cases. So these companies that are not yet mature go to the public markets, and then they get punished for missing a quarter or for not being at par with what you would expect from a major bank or a financial institution that has been dealing with the financial market or with the equity capital markets for a long time. Having said that, I do think that sometimes people forget that fintech is financial technology, not just technology. At the end of the day, you need to make money. So if you're a lender, your lending margins have to be positive. If you can have a minimum scale. Everyone needs a scale ambition. You can have working capital needs, but if your lending margins are not good, there's no way you're gonna succeed as a lender unless that's part of your plan, and then you would have to make sure that you don't go public before you reach that point, because otherwise you're going to get punished by the public markets.
So you brought the WeWork issue because they had a private valuation of 45 billion, and now they're seeing if they're going to do the IPO in 20 or 15 when they've invested $12 billion. I think the lesson there, I think it has a lot to do with the fact I've been an entrepreneur for 20 years. I've been doing business in Latin America for that time. And I've seen the cycles. I've seen the year 2000, 2008. I'm from Argentina, so you can imagine the roller coaster ride I personally have had. And I think as an entrepreneur, you have to be careful. You have to be careful and not start believing also in all these crazy valuations, because if you're hit in a too high a valuation, you're going to get completely creamed, because right now what's going on in WeWork is I don't know how they're going to be able to maintain employees at the same time, because if they go out with an IPO at this valuation, a lot of people are getting wiped out in that sense. So I think there's one side, investors evaluating companies very highly, but entrepreneurs have to be also very careful with that, because it can be a very strong problem down the road, you know?
I think just the last point, there's also a governance piece. So if you look at, WeWork or Uber, there are a lot of questions around governance and corporate culture and things like that. And that, I think ultimately it's hard to tell a capital market story if you have questions about who controls the company and some things like that. So I think that's something else for this generation of startup entrepreneurs in Latin America, is that, the kind of governance, you need to bring it in sooner. You need to be serious about it. Most companies are going to, if they're growth startups, are going to be tapping into international markets for venture capital or PE funding. So having kind of your governance in order and doing that sooner rather than later is going to be key, and it's going to actually differentiate. So there's a kind of an arbitrage around actually having very strong governance and very clear kind of financials and practices.
Okay, well, would you like to
I'll just say that, again, just to add something on and kind of like put some spice on the discussion. We have to remember that we live in sort of like a negative interest rate world, right? So, like, people need good assets to invest on, right? And there's like this imbalance of like how you're going to be like picking those assets at what price, what specific price. So there's a lot of pressure on investors to put that money to work, and that creates this imbalance, and where people are like just overvaluing really good assets and putting a lot of pressures on entrepreneurs to take those maybe like crazy or high, or depending on how you define it, insanely high valuations, just for the sake of like taking money and managing dilution at maybe like the wrong point in time. Yeah, in many countries, money is burning. So QR code versus credit card, how do you see that in Brazil? Why do you believe it's not working in US? Rodrigo?
I think it has to do a little bit with what we were talking a little bit before. You have a legacy system of credit card POS in the US that just kind of works, right? And you have countries such as Kenya with M-Pesa or China that they have pretty much leapfrogged the whole financial industry in that sense, and payment industry. And I think having those legacy working systems in the past has just, between getting your credit card and paying and doing a QR code, there isn't a 10x improvement in the experience. And again, you start seeing Brazil with that lens, and you start seeing, again, a hybrid where you have a significant amount of people that don't have cards. There's a significant that they do. But combining today, I think QR code with credit card is kind of going back right now, because at the end, paying in Brazil with a credit card with a PIN is fantastic for controlling fraud. I think the reason why, in a sense, I believe a Stone or PagSeguro really could scale payments dramatically offline is because there's practically no fraud when people are paying with a credit card with PIN. And that's just magical in a sense. But once you start tying up credit card with a QR code, which is a card not present transaction, you can start having way more chargebacks in that sense. And I don't believe necessarily right now that this land grab of trying to just do things with QR code necessarily works in retaining customers. Most customers, if I pay with a credit card and I get 10 reales discount with a QR code, I'm definitely going to pay with a QR code. Then it has to do, are you changing the behavior of that person? Or is it just a strategy of user acquisition? Maybe it could, maybe it works, right? You do it, you acquire a user, and then they use other stuff. It's to be seen in a sense, but I think it's very positive still what's going on today because it's educating millions of people into a new form of payment with your mobile app. And I think that in itself is extremely positive because it is going to come. I mean, the Central Bank of Brazil is allowing now wallets to accept salaries and things of the sort, and eventually you're going to have a cash-in that is extremely cheaper, and you're going to be able to do payments with a QR code. It's going to be much more efficient than actually tying it up with a credit card. So that's my opinion.
Okay.
I think that's a really good, strong opinion. We don't. I don't think we're going to see a lot of changes in habit, to be very honest. I think I agree with you.
Benjamin, Rafael?
I always come back to the point that like financial services like are friction for something else, right? So at the end of the day, this process of payment is a friction between like you having worked and having money for something and like getting to the good or service that they're looking for, right? If it's a credit card or a QR code, the thing is like, what's the most efficient way and most convenient way to get to that? And again, like Brazil is somewhere in between like what happened in China and Southeast Asia and what happens in the US and Europe, right? The credit card penetration is so high in the US, the industry is so efficient, everything's prepared for credit card swipes and all this and all that. Whereas in China, there was like no penetration at all, no infrastructure for processing credit cards, so they had to leapfrog the whole thing. So Brazil we see sort of like a hybrid, and again, like I agree with Rodrigo that Stones and Pags are very well positioned to keep kind of like just like building on the technology and distribution that they have built, because it's getting cheaper by the day because they've reached scale, and it's going to be a competition among everyone. The one thing that I think it's important to point out is that credit cards in Brazil are not credit cards in the sense that they do not extend credit to consumers, right? So they're like pretty much like a payment method, and retailers actually like take the whole float issue, right? So like credit cards in Brazil do have positive floats, which is something that's like unparalleled in the whole world. So there's like a cost component to this that's going to be critical in defining like how that's going to play out.
Benjamin?
Yeah, just very briefly, taking it from the consumer perspective, I do think that credit card penetration is pretty deep already in Brazil. I still think credit cards are aspirational products, and so people like to have that plastic and to be able to show that they have a credit line and everything else. And so I don't know that necessarily from the consumer side, there's this huge demand to have a slightly less frictionful transaction. And so, to their point, maybe it would have to be the other side, the retailers, for example, pushing this and giving enough incentive for people to change the behavior, because I don't think the demand is coming from consumers today in Brazil.
Okay. Do you have any view about what's going on related to Libra, Calibra? Any of you would like to comment? Rodrigo?
Well, in the sense of cryptocurrencies and look, first they need to launch it. If we're going to go precisely with Libra, right? I think it was a really great PR stunt. I mean, for a product that they didn't launch, that was fantastic. I think they're trying to change the story of the issues of the challenges that they're having in Facebook with privacy concerns and things of the sort. But at the same time, what's going on is the there's been a consortium with the Chinese government right now that they're doing a cryptocurrency backed by Alipay, Tencent, and a whole bunch of other players, Baidu as well. And that seems that it can have a lot of traction. I mean, again, when we start thinking about mobile payments, the kings of mobile payments are the Chinese with WeChat and Alipay. So if I would have to bet on anything, I would probably bet on a cryptocurrency actually backed by the Chinese government. Is that better than Facebook? Probably not, but you don't know. You really don't know. But still, I think there are going to be use cases for it. I think there's still a lot of road to be gone through that to see what happens with it.
Yeah, I'll just say that I think if we shed some context on this also helps, right? Because at the end of the day, Facebook, it's not just Facebook, right? It's Facebook, it's Instagram, it's WhatsApp. So who else in the world can do better KYC than Facebook in Brazil right now? So there are a lot of Brazilians in the audience here, but I'm quite sure that if we ask everyone here, everyone has WhatsApp installed. Everyone. And if we ask everyone...
Brazilians love free stuff.
Yeah. But if you ask everyone, if they only had a choice, they would either uninstall WhatsApp or they would uninstall their bank app. Anyone here would uninstall their WhatsApp? Who would uninstall the bank app? Everyone. It's a matter of choice, right? And the country itself runs on WhatsApp. The amount of data that those guys have is insane, right? So from a KYC standpoint and understanding behavior and all the things that we mentioned over here, they are in a very privileged position.
Yeah, but that's for being a marketplace, not for issuing a currency, right?
But if the currency is just a way to position yourself in the marketplace, who knows, right?
Yeah. Well,
I agree with they still have to launch it thing, because in the end of the day, there's a lot going on in crypto, right? But it's what remains to be seen is how people are going to convert different monies into things, right? So nowadays everyone has virtual money. You have mileage, you have coupons, you have whatever, right? You have all these companies that are being funded by VCs and giving you more coupons and more stuff. You're going to need to monetize this stuff somehow and convert them into things that you actually want or need. That's, I think, where the jury is not out yet to see how that's going to operate.
Well, 1 minute. So I'd like to thank you, all of you, Benjamin, Rafael, Sandro, and Rodrigo. My pleasure to be here with you. I'll invite our partner, Fred Pompeu, head of Boost Lab. So thank you so much for the audience.
Thank you.
Thank you.